Hi folks, this is RAJAT Bose from Kolkata. Hello friends, I've come back again with a new episode. This time, how would you manage the financial repression? That is, the interest rate that you get from the bank deposits, which is lower than the inflation rate. And this is actually troubling for the retirees, troubling for so many others. How would you counter that? Is there an opportunity, a long-term instrument you can use that will give you the benefit of better returns? But before that, I would like to tell you one thing, that if you like my program, please press the like button. Also subscribe to my channel and don't forget to press the bell button as well, because the notifications will reach you the moment I come up with a new video. Today I am actually going to talk about certain principles. Actually, if you have to be in the stock market, then you ought to be making money, and if you ought to be making money, then you better be in the market. I am saying you better be in the market means the first principle is ensure your longevity. If I have to tell this in Warren Buffett's words, he has this rule number 1, don't lose money, and the second rule is don't forget rule number 1. Don't forget rule number 1 is the second rule. So you know how strongly he emphasizes not losing any money. If you have to make money, or if you have to avoid losing money, then the first thing that you have to ensure is your margin of safety. As per Benjamin Graham, Warren Buffett, Charlie Munger, or say Seth Klarman has written a book on margin of safety. They emphasize that your entry price in a particular stock should be such that the probability of your losing money is very, very minimal. It cannot be said that still you can't lose money. Definitely that can happen for various reasons, but to do so, that means you would have to wait for your price to come when you actually would enter. This is the most problematic thing, because we all suffer from a thing called FOMO, fear of missing out. And that fear of missing out propels us to jump, because we cannot tolerate that our neighbors, our friends are making money and we are not making money, or I am not making money. So we also jump in, and that creates all of a problem. That is, you are getting into the stock maybe after a protracted rise, and that causes your purchase price to be pretty high, and if you do so, you are susceptible to see your stock price going down, and at least notionally you would have to contend with losses, you will have to face some heartburns. But there are other principles as well. This is the first one. We will definitely discuss this in full detail, but for that, wait for the next episode, where I would discuss not only this principle but also other principles associated with it, which would actually help you ensure your longevity and which will help you make money, and you will understand how to make money on a consistent basis. Don't forget to watch my channel to see how we do it, and if you like my channel, please press the like button, subscribe to my channel, press the bell button so that you get the notifications whenever a new video appears on my channel. Welcome back. I have come again. This time we would discuss the Nifty and the BankNifty. How did they fare in the week between, say, 8th of August and 12th of August. It was a truncated week since 9th was a trading holiday due to Muharram. The next week is also a truncated week because we begin with our 75th anniversary celebration on 15th of August, our Independence Day. Now, coming back to the market, what I would like to tell you is this, that the bulls have achieved a great feat. They have not only crossed 50 calendar days, they have even crossed 56 days. In fact, when we begin the next week on the 16th of August, on calendar day count it would be 59 days. So it is really a very big achievement for the bulls since the top that was posted on 18th of October 2021 at 18,604. So first let us see that at what level we would say that the index is getting vulnerable for a correction. Prior to that, I must tell you one thing, that before the trading of Thursday and Friday, market closed on the 10th at 17,534, but the Nifty opened with a gap the very next day, and the low on that day was 17,631, and the low posted on the 12th, that is Friday, was 17,597. So the gap, there is another gap, and this time this is the fifth gap. So the probability of a correction definitely comes into the picture. Being that, having said that, what I would like to tell you is this, that though the probability of correction is becoming higher every passing day and every passing fresh gap, but so long as it continues its upward journey, we need not preempt any correction. However, the range between 17,975 and 18,010, this range, or roughly speaking 17,960 to 18,010, this 50-point range or 50-point window is actually a strong resistance to reckon with. If 18,000 is really conquered, then the next target would be something like 18,100, and after that 18,350 and 18,600. These were the the three peaks prior to this peak, prior to this movement. So we need to observe the range between 17,960 to about 18,010, the range. On the downside, as I said, that unless it falls below 17,400, there is no problem as such for this uptrend. Any dip will be bought, because that level is very crucial. A close below 17,400 would mean that this is the first chink in the armor of the bulls. And even after that, unless the Nifty falls below 17,000 to about 16,980, this is the most critical level. If this level is also taken out, then a lot of selling will happen, because this 17,000 mark is now going to be used as a benchmark for a lot of investors, whether they would book profits or stay put like that. And till such time we see the Nifty falling below 16,600 levels, I would say all dips and subsequent recovery, then it would be said that that downswing or that dip is mere correction in the upward journey that began on June 17. One thing, now that the index has come very close to the 18,000 levels, it is within the striking distance, only some 300 points left to conquer the 18,000 mark again. What I would like to tell you is this, that there could be a higher high that we might see, that is above 18,604 recorded on 18th of October 2021, that is the all-time high. Even after posting an all-time high, there can be a dip and the bear market can resume. Don't think that crossing 18,604 would mean a fresh bull market has come. It can actually be a very strong counter swing. After that, a lot will depend on the fundamentals, the performance of the companies, as well as the stance of the central banks for their increasing, enhancing interest rates in the form of repo rates or whatever, and also the kind of withdrawal of accommodation that the governor here, the RBI governor here emphasized. So a lot of things will depend on that. But for now, things are looking positive. Unless 17,400 is broken, we would continue to see the Nifty going up. That is the possibility that is looming large at the moment. For the day, we conclude here, and I am very thankful to all of you for being with me. Please send your suggestions, whatever you liked, disliked. Write your comments in the YouTube and also give suggestions. However, one more thing I would like to request you, that is, if you like my videos, press the like button and also subscribe to my channel, and don't forget to press the bell button. Thank you.